The Bank of Japan is about to trigger crypto's biggest liquidity drain in years. Bitcoin is facing unprecedented selling pressure.
The biggest in years? That sounds serious. What's going on behind the scenes?
4 critical developments just hit: the BOJ rate decision, a record stablecoin market cap, Ethereum's upgrade, and a surge in AI agent mindshare.
Okay, let's start with Japan. What's the Bank of Japan doing that's so dangerous for crypto?
They're planning their most aggressive rate hike in decades. This threatens to unwind the entire yen carry trade.
The yen carry trade? What does that mean for crypto holders?
Investors borrowed cheap yen to buy risk assets like Bitcoin. When that reverses, it forces mass selling and deleveraging.
And the timing is bad, I assume?
It's brutal. The BOJ decides on December 19th, just 2 days after the Fed's call on the 17th. There's no room to maneuver.
Wow, so smart money is running for the sidelines.
Exactly. That's why the stablecoin market cap just hit a record $314 billion. They're preparing for volatility.
So with all this fear, is there any good news?
Yes, while macro fear dominates, regulatory clarity is building major structural strength for the industry.
How so? What's changing?
The UK's Digital Assets Act and the US Genius Act are creating clear legal status and rules for crypto. It's a huge de-risking event.
So this is what unlocks the big institutional money.
Precisely. And the infrastructure is being built. CBOE launched new futures, and Hyperliquid's new testnet unifies spot and perpetuals.
What does that mean for traders?
Massive capital efficiency. No more siloed funds and less liquidation risk. It's bringing TradFi-level sophistication to DeFi.
Speaking of ecosystems, what's happening with Ethereum?
Its dominance is growing. The Fusaka upgrade slashed Layer 2 fees by 40 to 60% and boosted capacity 8 times.
So capital is staying within Ethereum's ecosystem?
Yes, cross-chain bridge activity has collapsed 70%. Capital is consolidating on Ethereum and its L2s.
Are there any other narratives gaining traction?
AI agents are a big one. DPIN integration showed a 15% cost cut, and Cardano's privacy token surged 30% on institutional demand.
So utility is attracting capital, even in a fear-driven market.
That's the key. The macro threats are real through December 19th, but the structural improvements are building long-term explosive potential.
This is moving so quickly. It feels impossible to stay on top of everything.
That's why we're here. The markets move fast, and you need real analysis, not hype. We cover every critical shift.
So what's the best way for our listeners to keep up?
Subscribe and like for updates every 12 hours. We'll keep you ahead of every major move while others are just reacting. Stay sharp.